Hello everyone, my name is Moji. You're watching a Bitcoin bubble news channel. That's why all of the assets I chart against world liquidity look the same. For Nasdaq, 97.5% of it was linked to world liquidity. The other part is the outperformance because the market is unique. In fact, the S&P 500 does about what it should. Why? It's because it's a broad-based measure that is sensitive to the economy. That's why it kind of makes sense global cash. It does not give you an edge. I think the S&P 500 has gone up about 8% a year since 2011. That's the same thing as debasement then. Nasdaq has gone up about 17 points, and Bitcoin in Los Angeles has gone up 150 points. This video shows Raoul Pal talking about the current state of the macro crypto cycle and giving us ideas about how to invest in digital assets in the future. Airdrops, liquidity factors, managing the flow of information, and other issues are talked about. I don't think of liquidity as a flow of money. It's just a pure loss of value for the cash. If you put money here and take it away there, the value of an item seems to go up. It took me a long time to figure this out because I kept mid-curving the whole thing because I couldn't see why the stock market wouldn't have more volume when there was liquidity or QE. Because of this, it can't be doing anything. That stayed in my mind for 2 years before I finally went, oh, because it keeps coming up. Over COVID, I saw it in the Cayman Islands. That's how much home prices went up by 50%. They didn't trade there, they just went there because it was easy to get money. I thought, okay, I'm getting it, we don't really see this magic force. About 8% of the world's currency is lost every year. So we're gaining each other. At about 8% a year for everyone in the world to pay back their debts. It's like a tax. I looked at this the other way because at first I thought, how dare they tax us? After that, you ask, how much would you pay for a put option that your stocks don't drop more than 30%? Your home prices are safe. And the world economy is safe, would you pay 8% a year for that put option? It's probably not way too expensive. That made me think differently. This is why I believe we've removed the left tail risk. This 8% is being used as a put option throughout the whole system. Okay, this is more about the flows, the real flows. That's the other thing you're asking. I'm thinking about whether it's into tech stocks or from those that bridge, like the Bitcoin ETF bridge. This is what I call hot money flows and what we call foreign direct investment. Yes, that means that both of those flows are driven by something very simple. It's the way business works. Why? People have more money to invest when their wages go up. Yes, the rivers start to pick up. The ISM is still below 50 right now and is having a hard time picking up. Looking ahead shows that the screening level is better. Things are about to get better, but most people aren't investing in crypto yet. Why? People don't have the cash because jobs are still hard to come by and the market is still bad. From the VC companies, you know that nobody has had liquidity releases. There is a real problem at every level of the stack, from private equity to growth VC. The only place it's not a problem is with early stage coin stuff. Capital is stuck because it's not making any money. If you think about Tesla stock, the reason it's not very high even though it has all the tech stuff is that people only buy cars when they have money, which isn't much right now. The rates are a little too high. The ISM starts to rise in the macro summer, which is when the business cycle starts to pick up. This is because of the everything code and the crypto and the macro or crypto seasons. When earnings start going up, guess what? The world is full of people who take risks. That's it, I think, which is why it sounds so great played over and over. What works for me, people are still guessing wrongly about how much Bitcoin Minty Gox sent, and whales will probably use those Bitcoins to buy more Bitcoin at a price. CryptoCoin CEO Key Yanju wrote on X-Key on July 16th that sales ranging from $3 billion to $9 billion in Bitcoin had little to no effect on the rise in Bitcoin's market value over the last 18 months. There is enough cash on hand to handle selling $3 billion worth of Minty Geeks on Crin. That's only 1% of the realized cap increase in this bull cycle. Kai also said that the price of Bitcoin wasn't so much set by people selling, but by fear, confusion, and doubt among investors, or by bad things that people didn't know were happening. People were selling because they were scared, Kai said, but smart money was always buying more. Bitcoin Key linked to a post from July 10th that said permanent owners of large individual custodial wallets that had no losses had accumulated 85,000 BTC in the 30 days before. It was being taken away everywhere. What do you think? Well, the prices of things went down. Why? The value of the was rebasing currency, not debasing it because you were cutting down on the amount of money that was available. Okay, now you understand. It's kind of like buying back shares or burning coins. It's always the same way of fucking. After you see it, you'll think, oh, that's so clear, that's why all of the assets I chart against world liquidity look the same. For NASDAQ, 97.5% of it was linked to world liquidity. The rest is the outperformance because the market has been going up for a long time. The S&P 500 actually does about the same. Why? It's because it's a broad-based measure that is sensitive to the economy. So it makes sense that world liquidity would follow. It does not give you an edge. I think the S&P 500 has gone up about 8% a year since 2011. That's the same thing as debasement. Then, about 17 has been done on NASDAQ. Then Bitcoin in La La Land has done 150 because what we see in individual stocks and tech stocks is network acceptance and video. Okay, all of a sudden it does that. We do have a whole stack of technologies that do it all at once, though. It's really interesting. Years is, if I've put a lot of money into this theme, I'm not going to take it out. Then it gets rid of all of this. That's why my only goal is to buy the sell-off. It changes how you look at things because the highs are lower, the lows are higher, and the highs are lower. In reality, you just add, say I can't wait for the next 85% correction when it comes in 2026 because I can buy more at cheap prices and keep compounding. This will keep the stress level low. The hard thing is that the last time was tough because most people's wages were going down. But in general, you get a bit of a slowdown. But if you can just add new gains, they will just add to your wealth. That's why Bezos and these other guys are the richest people in the world. They made one bet and never lost it. I see this. People are in a panic because they know there is a way to trade this thing. From my point of view, don't use price, use time. You want to buy a new house and car or whatever it is, and take some living chips off at the end of this year, no matter how much they cost. Then you can run the rest. Then I try to figure out how this loop is put together from a probabilistic point of view, mostly just because I was interested. This is where I get signal from Twitter. It's just hearing what everyone has to say. A shortened cycle, or the end of the cycle last time, scares people crazy. Yes, I remember how boring the 2017 top was, the 2013, and the years 2013 to 2017 were a lot like the last one. Last but not least, remember that there were many other things going on during the world pandemic. Like I think that was the exception. Expect some things to not go exactly the same second time. But like you, I think it's likely that it will only last until the end of the year. According to the broad work I've done on liquidity, it just peaks out and doesn't go negative or do anything else. By June or July, it's just at its peak, out of 25. But I see Twitter getting tangled up over that part where people are afraid of the last step. That's why they really want to sell faster. Yes, they want to sell faster because they are so scared of it. That makes me think of the year 2000. 13 cycle feels more like the one where everyone is going to try to make money. It's not over yet, so the market goes down and then rips in your face again. There's a lot at stake. Could it end in March or something? That would be very strange. I don't think the short cycle will happen. I think a slightly slowed rhythm is PTSD. I believe what you feel is true. Kind of like, this always ends the end of the year. Everything code is the same loop for getting rid of debt. Why would it have to change? Since you already said that the end of a bull market is not about money coming in and out, it's about money moving in and out. Since Bitcoin broke through the $65,000